Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar index just kind of holding flat from yesterday's move. You can see here, I can open that up a bit. We'd actually closed just a hair above, or just a little bit above, our bias chart resistance, which was 93. I think it was 93.04, and we closed at 93.09. We're just kind of holding steady here. We're not doing anything. One of the reasons we thought maybe we could not completely come apart was we thought that there was a potential for equities to slide. I didn't think they would slide this much in such a short amount of time. I thought they would slide back, but that would provide a little bit of an undertone bid. That being said, it's a pretty decent slide. So a little bit disappointing that we couldn't see a better rally here with the dollar. We'll take a look here on the euro. And you can see the euro pair back here yesterday, but we're just kind of holding here and just a little bit better from yesterday's close. Take a look at the cable. This is interesting in the sense that what we had already before, we had 3 straight down days, kind of holding here. And after a bit of a turnaround here, the Aussie, we're kind of just holding here, just kind of holding in place, not really a big movement. See, yesterday was fairly tight range here. With that, we'll go on and take a look at where we stand here on the equities. Okay, and I really wanted to look at that. Actually, I wanted to look at the Aussie, and she said NDX, and I'm thinking if she means the NQ or just the actual Nasdaq index, which would be, which I don't look at that specifically. Yeah, but I'm thinking she means the futures, the actual futures, as opposed to the index here, which that's the NDX. We'll go to the NQ. So hang on. Here we are on the NQ. Now, this is we actually reached a level that we had talked about the potential we could reach. And I'm talking about the anchored VWAP. So it actually went below the anchored VWAP of this is when Trump said stimulus talks are off. We went there and we went well below that and then came back above it. So I'm not going to count this at all anymore because the market didn't really react as very well. If it would have kind of held like bounced off and then we rotated lower, but we actually ended up going down to, which was a level that we talked about the middle of last week that potentially the market could go to. And we saw that, and we seen a decent bounce off of that level. Not bad at all. I mean, about 175 handles off of that low, which is this 11,355. You can see where I'm coming up with this level, which you can see all the touches here. And you can see how the market rallies here. We come back, rally through it. We come back to it. We kind of hold a little bit. We break below it. And once we get back above it, it's blue skies. Then we come back to it. We rally up here. We come back in here, and there's a big old fight here. Market breaks slower. We come back to it. So obviously you can see the significance on this line here. So that's why I thought it was a key level here. Market, actually, I ended up even taking a short going into this level. I think my cover was like at 358 or something. And it wasn't even a very good short, to be quite honest with you. I mean, my target, if you saw me in the chat room, was 11,687. We got there, and then the market was so strong. I myself even got fooled by it. I took a short at that level, but I ended up not staying on it very long. And then actually on the dip down, had bought and then had to buy a little bit more, and then came out of that okay. Then I think I bought some more, came out okay, and then the short, and then I did not think we'd break this low, so I was hesitant. Other than catching a couple of quick scalps and finding like they're gonna go to that level. I mean, I see it so many times. I'll have a level and I'll say, well, it's too late to sell it now, so I shorted it anyway. And we went right into that level. We actually dipped them a little bit below it before we saw a nice little rebound. So that's the breakthrough here on this. And the reason I'm saying that so that we can kind of discuss, I think today's kind of interesting and in that. So now it's a matter of, I think, the market. We're in this area here, and we're stuck in it for a while. How long we stayed in that area here. And we finally broke lower. And this, I just put the trend on here for going forward. But we finally broke. And when you look here, the reason how I came out with that 11,687 was here on the 30-minute. You can see I had that pink line there. That's just going through the closes. That's ended up coming with 11,687. I didn't have the pink line here on the chart before, but when I posted, I was trying to point out this is how I was coming up with this level. I think I had the trend line there. I just didn't have it in pink, but usually I do to highlight and then marked it off. But that's how I came up with that level. But the market was acting so strong at the time. Remember, we came and we're working lower. We just shot up like a rocket, and everything was pushing higher. But that being said, so at this point, I think the market, we got to an area where I thought that would be a bounceable bottom, and that was from last week. I thought, okay, if we get there that low, the market should find some support and we can move higher. Going forward now, this would be, I don't think they could get there, but that would be the resistance area here. This, you can see the significance of this 11,605. Matter of fact, on the way down, I had that as a level back then, and we ended up holding on the way down on this first initial move. You can see here, then we rallied off of that. And then, of course, we got stuck in that area with stimulus talks on, they're off, they're on, they're off, they're on, they're off, they're on, they're off. No one thinks it's there anymore. So I think really, when I mentioned this yesterday, I think this is more about, and I think I said that before also, was really more about longs getting out. Now, we saw more, but I don't think we've seen like hardcore selling. We'd have to get a close below 11,355 to say, whoa, we're really now in for a correction. So this is basically this area just being corrected off. I think we may just kind of be stuck here. I'm not sure what's going to happen. We're not that far away from the election. Actually, 1 week. So the market's already broken down. We bounced up because I think that was a tradable bottom. Not that it's bullish, it's just that we reached a level that where if you're short, you'd want to go in and cover, and then that allows some movement higher. But I think now we're just kind of be stuck around here. We'll see how this goes and plays out. Taking a shorter look at the S&P. Same thing here. Here's the anchored VWAP, and once again, I don't think there was a very good reaction to that. And from the 21st. So same thing, essentially. You can see here we came to a key level here, that 33.52. They almost made it. They didn't quite get there. But once again, that my level was geared towards the NASDAQ. But you can see this is a good level here. This 33.52, it almost got there. Actually, basically, I'm going to say, let me see, got to 33.55. That's pretty close. As I say, close enough for government work. It just wasn't as defined as the NASDAQ. You can see that one is clean as a whistle. And they got right to it. I think they ended up dipping as low as something like 348 or something before they turned things around. I actually got long some, but I didn't stay in it for too long. But anyway, that being said, I think that's the way it's going to go on and play out. If we look at, we'll take a quick look and see what gold is just kind of doing a whole lot of anything. These I have them on short-term moves, but you can see the run-up we had here. Bear with me. The run-up we had in the morning was just bananas. I mean, look, we had already gotten here, and then all of a sudden we took off like crazy. Actually, they came in right into this resistance, but I've seen that, and I've played against levels, and the equities will just keep on going. You'll hit a level, and then it'll just keep on going. So, but really, once they did start to pair off, they really paired off like crazy. Actually, it's on the daily trend line, app sitting on the daily trend line here. We do have Microsoft earnings after the close, and this was just horrible. It just wouldn't even quit selling off. It was just really under a lot of pressure yesterday. So anyway, that being said, we'll go in and take a look at the calendar. So at the top of the hour, we do have some money supply numbers and Eurozone loans to households. And as we come into the States, CBI distributive trades, that's going to be for UK data. Then we do have durable goods and transports at 8:30 Eastern. Monthly home prices at 9 a.m. and Case-Shiller at 9 a.m. Just home data. And this will be a key number, consumer confidence at 10 a.m. Eastern, with Richmond Fed, which is a third tier Fed area outlook. And then we get Dallas Fed services at 10:30 Eastern. That'll be key also to a certain extent. So let's take a look at the news. The Australian and New Zealand dollars prove resistance to coronavirus woes. The Australian and New Zealand dollars held firm on Tuesday as both countries' relative success in combating COVID-19 supported local sentiment in the face of a darkening global outlook. The Aussie was up 1/10 at 71.31, comfortably above its resistance, recent low at 70.18. While the resurgence of the coronavirus is threatening economic growth in Europe and the United States, most of Australia has little to no new cases, and the country's second largest city, Melbourne, is finally reopening, having contained a major outbreak. The relative success helped consumer confidence climb to an 8-month high. People remain cautious about the current economic outlook, but confidence in future economic and financial conditions is more positive. Holding out the prospect of a recovery in spending if labor market holds up. But confidence in the future, okay, we holds up. Another positive for the Aussie was the continued inflow of foreign equity bids, the latest being a 9.28 billion offer for Coca-Cola Australia. And that was in Aussie dollars. The recent run of M&A news is the important reminder of just how supportive equity capital flows have been and remain. We see the odd capped at 71.70 to 72 cents with a break of 70.10/20 support required for a move lower. We see any dips as a good buying opportunity as a strength by the end of the year and beyond. Oh, not a whole lot said. And we'll move on to the overall FX outlook. The dollar holds small gains as the market's buffeted by COVID-19 woes and election uncertainty. The dollar clung to small gains on Tuesday as the greenback safe haven appeal was burnished by worries by about a second wave of COVID and the steepest sell-off in a month and underpinned a bond market rally. The dollar is broadly stronger, but not massively, said National Australian FX strategist Rodrigo Catrill. The dollar is stronger. I think many would probably remember the bad experiences we had going into the Trump-Clinton election, said Catrill. I think part of the pullback was not only people getting finally frustrated and throwing in the towel on the stimulus talks, but polls, and that's just the polls, have tightened here. And so one of the reasons that the equity markets were holding out so well, if you back up the truck to about 6 weeks back, there was concerns about the contested election. When you saw these wide polls for Biden, then he had a twofold move: less chance for a contested election, and the talks said if the Democrats see the blue wave, then we'd see a big stimulus like the 2.2 trillion. So in the last few days, or I should say last week, there's been a tightening of polls in the area. I know that at one point, 2 months ago in Texas, Biden was actually leading. Then it fell back to basically tie with Trump leading. And right now it's like Trump leading by 4 points. Now, that'd be huge if the Democrats were able to flip Texas. But there were other areas where they think it was tight. I think in South Carolina, same thing there. So that brought in a little bit of concern. Of course, obviously the deal with no fiscal stimulus, but we've seen the drop. We've seen a pretty good sell-off here. Not huge, but a pretty decent sell-off in equities already. So I think right now we're just going to just kind of like meander around, I would believe. I'm not seeing anything really big on the horizon. I think the sound that had been done has already been done for the most part up until we get into the election. But if you had a position on, you would have been whipsawed big time. I think the strategy this time is to travel light and to choose the opportunity on the day rather than to take on any very, very strong position going into the election. Now, they're talking about the 2016, whereas when it looked like Clinton was beginning the evening to win, the markets were doing really well. Then as it looked like Trump was going to win at the time, obviously did, but at the time when it looked like he was going to, the market started selling off a lot more and really sold off. Then by the time it was apparent that he won, we were so sold off, and then the markets turned around and reversed and came back real strong. So that's where they're talking about getting whipsawed, and where people may not want to have any exposure. They'll just want to come in that day and see how it plays out. Biden and Trump both spent Monday campaigning in Pennsylvania. Just say a week out from polling, national polls give Democrat Joe Biden a solid lead in a much tighter and battleground states. And as I said, the polls have tightened. It's like, well, what do you mean by that? Nationally, he leads Trump. Well, nationally at the time, Clinton led Trump, and she ended up losing. And that was there was a concern that some of these polls in some of the individual states have tightened because here in the states it doesn't matter what the national uh, data is because ultimately Clinton won by the popular vote, but it's won by the electoral college, and each state has, depending on the size of the state, has a significant amount. Like I know in Texas, we have 38 electoral votes. I can't remember what Florida's is. I think it's like 28 or something like that. I'm not sure, but each state, New York obviously going to have a big electoral. California is going to be huge. I think California is even bigger than Texas as far as the electoral vote. It might even be closer to like 50 or something like that. But anyway, so takes 270. So that was part of the concerns or consternation. Nationally, though, the only difference is why they think Biden's still going to win is because at this time a year ago, 1 week before the election, Clinton had a 4 point lead, and right now Biden has a 10 point lead. So Trump would have to overcome that. So they're still looking for that to still play out. We're going to see how it all comes out. Also, people aren't taking any chances. And a lot of this I'm just saying for those that don't reside here in the States. So people actually going to the polls for the early voting and literally flat out record numbers. A lot of people are saying they don't trust it because of all the stuff that Trump had said about the mail-in voting. They're thinking they want to make sure the vote counts. So that really has driven a lot of enthusiasm. So that's why they think we'll see how it plays out. But the thought being that Biden will win, but we shall see how it all works out. Anyway, that's the background because we've already had the big move. So decent move yesterday, and I think now we may just kind of be stuck in the middle until we get to the election. So that's where we stand. So let's go on and move into the analysis. We'll start with the year dollar. There'll be some individual moves because we do have earnings. Today we have Microsoft. On Thursday, I think I covered that. Well, did cover it yesterday, but on Thursday we have Apple and Facebook, I think it was. But anyway, I could always go back to that. But we covered that. But today's Microsoft, and then nothing. Well, EB, I believe, is tomorrow. And then on Thursday, we get three big ones. So, but I think we've already had the move. So, and I was surprised to see Microsoft to keep on selling. But anyway, that being said, so here's the euro. Let's pull up the analysis. So the euro paired back gains on Monday, closing on bias chart support. Because remember, bias chart support was 1809 at the time. I think we closed at 1806 or something like that. As equities came under pressure, providing a bid for the dollar. Support on Tuesday will be 1760 with resistance at 1857. Let's pull up the bias chart. So support's going to be 1760. And resistance 1857. Go to cable. And we talked about this was interesting in the sense that, it's just been three straight down days, although it's been not, initially I was going to say in the analysis, the range has been tightened, but it only looks that way because we actually had some decent ranges here, at least here, but you can see it's tightened. Um, so moving on to cable. Cable paired back for the third consecutive session. Support for Tuesday will be 29.67 with resistance at 30.83. Now, the reason this one was so short, and usually I don't get into a lot of detail, I mean, not a lot of details, because when we use the bias chart, I've said it before, is it you want to use this as a tool. Sometimes, we'll catch the high and the low, or we'll come very, very close to it. But essentially, these support and resistance doesn't mean that's the high of the day, that's the low of the day, although quite often it will come very, very close to that. But what it means is, and I'll reiterate again, is that this is where I expect that there will be demand come in, where you'll see a fight being put up by the bulls or a fight being put up by the bears as we get into resistance. So I'm saying we'll be getting to that area here. But you want to use this as a tool in conjunction with your own analysis. So if you're saying, hey, I'm thinking about buying the euro. Oh, okay. You know what? That's coming into an area that I've got support in. I think I'll come in, and that's the way you want to go and use that. So when I was looking at the cable, and so I like to just get to the point. What are the levels? Because we're getting once again back to this, as I've said this before. These levels are essentially good for essentially 24 hours up to a little bit more than 24 hours, maybe from 24 to 36 hours. So sometimes we'll keep the resistance or support level the same depending on how the market has reacted. So that being said, they're short-term levels. So I don't get into all these details. I do look at it, but basically my analysis is going from level to level. Even on my main trading, when I look at the market, I keep it relatively simple. I will look at the exponential moving averages to let me know where the momentum's going. And if we have a big move down or a big move up, I will take a look at fib levels in conjunction with a level, but pretty much I trade to the levels. And so actually on a very short-term basis, that's where our focus is going to be when we're doing this, is on the levels. Bear with me. So that's why you'll see this analysis is, you may think of it as it's very concise. It doesn't mean that just kind of flip roll some dice and say, okay, this number, that number. It's just that for me, I think it's going to be silly is that unless we're seeing a big break, on a big level, is I'm going to say, okay, if you look at this and you look at that and you look at this, look, we're projecting levels for that day's trading. And that's why with the bias chart, you want to use it as a tool. Sometimes, like I said, the high and the low will be the bias chart support resistance. Sometimes will be the actual high and low, or very, very close to it. But it's meant to be used as a tool if you're to a certain extent for the day's session. Whether you day trade it or not, maybe you're long and you're saying, you know what? Oh, it's coming into that resistance. I think I'm going to use that to go on and exit. So that's what I'm saying is I hope I don't wasn't too wordy, but I wanted to go on and explain, for those that haven't been here for a long time. When I say a long time, like more than, let's say 6 months or something like that, is that's how I use this tool. It's used basically for the day trades. Not if you're not a day trader, that's fine. But I'm saying it's used as the day's support and resistance for the upcoming session. And even if you're a medium-term trader, you might say, well, I've been long euro and we're coming up into 1857. I think I'm going to lighten up now. You see what I'm saying? So in that sense, so you use it as a tool, even if you're not specifically day trading. I know some of the people in the room will use it that they actually hold for 2 or 3 days, but they'll sometimes I'll mention, oh, we're coming into the bias chart resistance here in the euro or support, and I'll see those that don't normally day trade say, oh, I'm getting long at this area. So that's what I'm saying. Use it in conjunction with your own analysis. So anyway, the reason why the cable was so short is I looked at it and I thought, wow, this is kind of interesting because these ranges are really very tight. And I thought, well, you know what? No, it's had a pretty big range. Look at this, from 29 and a quarter all the way up to 31, 60. I thought, well, no, it's not really that tight. So when I looked at it and said, there's nothing that I can point my hat to, because it looks like it's just reacting slowly back down. Doesn't look like it's a massive failure or anything like that, like it broke above and then closed down here. It just looks like it's just slightly paring back. So I thought, you know what, there's not a lot to say. I think I'm just going to find out where's a level that I think that there's going to be some demand come in, and I just usually find the most touches here, and that's how I ended up coming up with this 29.67. I don't know if they'd make it that far today. That even to me almost seemed like a bit of a stretch. But if they do, then I expect some pretty good demand to come at 29.67. Where will they run into some resistance? It's going to be right there at 30.83. So anyway, we'll move on. Now we know what the outlook or how we're viewing it. And let's mark these off. 29.67. And that's what I'm saying. I had 29.88 there. That 29.88 might be just as good as well for today, but that will give them some room if they want to maybe hit some more stops here. They may make one more little push, but the equities aren't under pressure, and the dollar's just kind of barely even hanging on to its gains. If the equities would have remained under pressure, maybe we could push lower. That being said, I'll stick with the 29.67 just in case. And once again, that may hold tomorrow. We may just keep the 29.67. We'll just have to see. And then resistance is going to be 30.83. And of course, cable still remains bullish. So hopefully that explains things a little bit better, because maybe some people may look and say, no, it doesn't seem like he adds too much. Or just yesterday to me was very annoying to see the Reuters story coming out with the on one hand but on the other hand, and like I said, if a market's not even moving, I'm just not going to make up stuff and go, well, you see, if it does this and does that when we're trading in a tight range. To me, it's just silly, so that's what, like I said. But anyway, we'll get back into the analysis. So that's why that may help explain with you. You may see me just say it's this and this and that, and that's it. And you're thinking, well, that didn't say much, but it could be because the market is just consolidating. Like right now, if you look at the Aussie, and we'll leave it at that. This will be the last one I'll say. You see, we saw this breakdown, and we did turn things around. And look, we're just holding in this range. We're consolidating. So we could maybe see it break higher, maybe lower. But for right now, we're just consolidating. And we're focusing on what are the ranges for today. Now, we did cover the story out of Reuters and some of the Australian analysis. The analysts, I should say, they're looking for the Aussie dollar to hold. So they're saying any pullbacks here, buy it. We're looking for this market to move higher. They're not expecting a whole lot, but they are expecting to move higher. So right now, we're just consolidating in this area. There's not a whole lot happening. So the range is going to be fairly tight, and you can't go with a whole lot right now. So that being said, the Aussie traded in a tight range on Monday. Resistance will be 71.82, with support at 70.87. You can see we kept the support for Monday. And I wonder if oh wow, that's really crazy. That was the identical one. That is really odd. Rarely see that happen. I was even thinking it didn't even save it, but it did. That's right. I did keep the same one. I did remember looking at it and I'm thinking, well, it hasn't moved, so I kept the exact same support and resistance. So yeah, this is correct for today, which is the exact support and resistance from yesterday. And you can see here, we barely even moved. And we're even moving even less, or even in a tighter range right now. So the ranges you can see here, tighter, just a little bit wider, then tighter, and then tighter. So anyway, that being said, let's go and move into the Kiwi. And I think that kept the same resistance, but we shall see. So today's webinar is actually longer than yesterday's, and yesterday's was the beginning of the week. But there's more stuff to say. That's what I'm saying. To me, it was just like I didn't think that there was a whole lot at that time. Now, once we got into what drove the markets a little bit, obviously, was the U.S. equity moves. Had nothing to do with FX per se. So looking at the Kiwi, you can see here we're in a better shape than the Aussie, but we're also consolidating just at better levels. So let's go into the analysis. So the Kiwi, like its cousin Aussie, traded in a tight range on Monday. For Tuesday, resistance will be 67.19 with support at 66.29. Give it a little bit wider range just in case they want to dip. 66.20, yeah, identical. Once again, we weren't moving much. So now let's go into the dollar CAD. So I hope that, although, I mean, the webinar is lasting longer, we haven't even got to the cross rates yet. But I hope that, like I said, this helps kind of explain, like I said, my view on the analysis and how we look at it. And sometimes it may seem that the analysis is on an individual analysis may seem rather curt, but that's the reason why. And if there's nothing to talk about, like we're not moving, I'm not going to sit here and just diddle daddle like a Reuters story on one hand, but on the other hand, and try and make something out of a 20 of the prior day's 25 pip range. That's just silly. But anyway, that being said, let's move on. Dollar CAD posted a solid reversal. You see now, as I said, nice solid reversal, taking out the prior 5 days closes as equities weakened. Resistance for Tuesday will be 32.42 with support at 31.57. And so the way I looked at this one too is it was important. They took out the prior 5 days closes. That was important, but we still haven't done anything yet. So really it's just a matter of the levels. Even here you'd say, well, wouldn't the resistance be all the way up to 32.68? I just don't think so yet. It's just there's still a level here and right in here and this level here, the wick here, and that's why it's more I'm not thinking of the right word, more restrained in what my resistance level is. It's not like, wow, that's a pretty big reversal. You think you'd see more follow through. So shouldn't the level be up here? To me, no. It just hasn't. It's been sick for so long that, and even though it took out the prior 5 days, it wasn't like as if it took out this yesterday, then that says a lot. Then we may have to put point much higher. But we've only gone and taken out this area. So that's why my analysis as far as resistance is more restrained. So resistance was going to be 32.42. It's still bearish. And support's going to be 31.57. Now let's go into the dollar peso. A lot of people in the chat were really talking about this peso. Like, why is it so strong? Why is it so strong? I mean, to me, what has it not been? I mean, they were like, why is this thing so strong? Well, I could see if you would have asked that here. I think I could understand when you ask it here. I'd understand if you can ask it here. Holy smokes, people, it's just been going lower and lower as is the peso strengthening. Why are you surprised now? I mean, honestly, seriously, I'm surprised it didn't even break even lower. I mean, the analysis we had at the start of the week was for this thing to go in and break even lower. And what it said, if we got a daily close, I think our support was 2076, and we said if we got a daily close below that, it would make a auger move to 2048. So let's go into analysis. I mean, I was even looking like, am I missing something? I mean, a lot of people really they're like shocked. I'm like, I don't get it. But anyway, the dollar peso weakness continues unabated. The pair poked its head above 22.10, but that had more to do with equities than anything else. Sell off, only to get knocked back down. Support comes in at 2070 with a daily close below that, targeting 2048. Resistance will be 2104. Now, I put 2070, but I didn't mean it to be that low because look, that's the key number is 2076, so it should be 2076. So let me get this change here. That. But still, if we get a daily close below 2076, that would augur a move to 2048. But it's going to be 2076, and then resistance is going to be 2104. And of course, it's bearish. I mean, there was a lot of people saying, and I guess that I think they were surprised, and I guess I can see that. I think they were surprised thinking with the sell-off in equities, we should have saw a far better rebound. And we've seen that before. but this thing just remains, the dollar peso itself remains so weak, i.e. Peso itself is so strong, it just can't get a lift. I don't know if there's anything oil was doing, but I really don't pay too much attention to oil anymore. I've told you all that before, considered looking at it as an alternate market to go in and trade when equities aren't doing anything. But I've twice in recently, you've seen that we've taken a look at it, and that thing's just like Jekyll and Hyde, just one, and not in a good way. One moment it's going up, the next moment it's going down. One moment it's going, it doesn't seem to be any good rhythm to that market. And I've traded before, but I noticed when I would trade it before with any modicum of success, I can't trade anything else. I would just look at that, unleaded gas, and Brent. And I didn't like doing that at all. And when I did that, I could get some success, but still, I just didn't really like trading that market. Towards the end of the day, the market will just run away and it won't even respect any levels. It'll just go. And I guess because so much short covering, I don't like that market. I don't think it's a very good market from a rhythm standpoint. You should be able to see things, levels being played out, or the rhythm of a momentum, like looking at moving averages, if it's going to run, and the markets will just, we showed it before, it will just be looking at a level and then drop down, and you're thinking, oh, wow, they washed up some traders and come right back up, then drop back down again with no rhyme or reason. Anyway, enough of that. So on to the dollar yen. You can see here, we're not going anywhere. We're just stuck in neutral here. And so the dollar yen challenged resistance at 503. That was our bias chart resistance. Before sliding back, Tuesday's resistance will be 503, will remain 503, and support it 442. So you can see we had 503, and the high for the day was 505. Okay, so off by 2 pips. The thing is, it wasn't like, oh, wow, pat self on the back or something. No, my point is that, to reiterate what we said, this is just to be used as a tool. Sometimes it will be like, wow, it caught the day's high or it caught the day's low, but it's used as a tool, like I said, for you to use in conjunction with your own analysis and say, wow, I was looking to get short the dollar yen. And that coincides with the level I'm looking at. Oh, okay. And, henceforth we end up sliding back. And support, I think I kept it at 427. Let's go back. Oh, 442. Okay, yeah, because we had that move higher. So 442. And let's move on to the dollar index. Boy, we've really spent a lot of time. We haven't even made it to the cross rates. So hang on. And after we sell off, we saw off in equities. I don't think there's anything to look at in equities individually right now. Because like I said, the other key ones are going to be Microsoft's today, but the bottom already fell out of that stock. I mean, you knocked a lot of people out of the box. And eBay's tomorrow, but the other ones like Apple, and I forgot who else, I think Facebook, they're Thursday. So we've already had those get flushed out, so they're going to have to recover. So I don't think that there's anything with any significance today, and why I was thinking we just may see the NASDAQ and the S&P's kind of just hang around for today. Anyway, that being said, moving into the dollar index. So each day, if you'll notice, sometimes on the webinar is a little bit different. Sometimes we'll focus a little bit more on equities, the actual equities themselves. But like I said, we saw the big move, so I think we're just going to be kind of quiet. And so a little bit more focused towards FX right now. That being said, let's take a look at the cash dollar index. The dollar index closed just above the resistance of 93.04 on Monday. Tuesday's support will be 92.69 with resistance at 93.24. Remember in the past, that 93.24 is a pretty big number. So 92.69. You can see we closed at 93.09. So it had a little bit of a, just close above it, we'll extend it. It's just like the dollar CAD, not really buying into it. And also with equities not under pressure, um, it's not able to even take off. You see what I'm saying? It's just kind of like turn around and then we just kind of sit there. Now you have to get ready though towards when we do get the election, because if Biden does win, then you should see equities really take off like gangbusters, and that's going to impact the dollar. Okay, now let's go into the cross rates. Go with the Kiwi yen. So we've had a nice little rebound here. You see that here? And then we finished in the middle of the range, but we still finished positive. We finished here and a little bit positive, although I really don't see how that was positive, but it is, I guess. Close here. And then here, we're doing the day positive. But you can see where the resistance is. I mean, if that's not clear as a bell, I don't know what is. So 70.14. Actually, we gave it more room for 70.40. Oh, that's right, because we gave it some more room in case they really wanted to make a push, but they haven't, and it's still here. But this is the resistance zone. But we've had a lot of pokes above here with wicks. But these wicks are a little bit, well, they're not too high. We're going to stay with this level, not stay with the bottom. We're going to go with this level, 70.14. So we're going to pull this down. And support, because see how we made it up here. So I don't follow RSI, but if you're following RSI, then the RSI might be getting a little bit overdone, or kind of like not able to move higher. So we could slide back down. Support, we're going to keep it fairly tight. We're going to go with the wick here, which would challenge that low there. And that's going to be 69.69. Let's go to the Euro pound. This was all over the place. Bananas. Down, then up, back towards here, then down. This was really tricky. I'm just going to go with, you see right here, here's the low for yesterday. Here's a high from the day before. Where can we see some volume coming in? Right there. You see right there? It's just actually going to be just a hair below yesterday's low. So 90.38. And on the upside, you see this one right here? That kind of takes out all these wicks. So that's going to be resistance, 91.11. Let's go to Euro odd. This has been interesting the way it slid back. And we finish in the middle of the range. We finish in the middle of the range, but they keep poking the downside. You see this high right there, that wick? That's what I'm gonna go with, which is actually that's where they went to right there. You see that? But we're gonna keep it there anyway. 65.29. And on the upside, the market's having a little bit of a tough time right now. At the upside, it'd be key if it can get a daily close above 66.11. But that's not saying much. I think stops can take the market to the bottom of this wick, which is 66.37. And Euro Kiwi. Same thing here. You can see how the euro, which looked like it was really going to take off, has really disappointed. And we're stuck here. You would think that they might be able to push some stops. I don't think they can make it all the way. They could maybe, but support's going to come in just below this 76.37. Right there. Let's go with 76.08. And resistance. That close, but you have a little bit higher. You see right there? And you have that close. So that's going to be resistance. 77.35. And support. Which we did mention, the 76.08. So let's go and move into the ASEAN. Boy, this one's really stuck in neutral. You just got to go with the levels. They can try and knock out these wicks. But you can see the significance of 74.84. But let's go for the top of these wicks. So right there, that one right there is the best. That's 74.94. That's going to be resistance. Support. We'll stick with the 74.23. Move on to the guppy. Boy, we are really quiet. It shouldn't impact the cross rates, but maybe these cross rates are going to stay quiet until the election. Doesn't make a whole lot of sense, but it could be that everybody's going to be reining in risk. I just don't see any changes here. 35.89, 37.44. Yeah. Because sterling was so quiet that, yeah, we'd have to allow for that. Last one is going to be sterling odd. No changes. Look at that. $82.22, $83.55. And that's it. You can see here, there's not a whole lot happening here. In equities, here's the NASDAQ. We'll take a look at the SPOs. Well, that's on a 5-minute. And I haven't updated the VWAP from same-day VWAP and 2-day VWAP. So, but we'll take a look on the 30-minute. You see here? So we're just trading kind of quiet. Not really a whole lot happening. We've already done the damage here yesterday. So we got a rebound, but we may just kind of sit kind of quiet. But anyway, that's going to be it. Thanks for joining us here on the European Crossover webinar. We'll get the bias chart posted, and we'll see you then.